Hey everyone, let's have a look at gold. Haven't looked at gold for a while here for these videos, largely because we decided in November to call gold potentially in a consolidation phase, and that has actually been largely true. So let's take a look at it. I've got a really interesting chart that I would like to share, but first let's have a look at the long-term situation here with gold, and long-term here we're going to go back a number of years. So you can see we very clearly had a meaningful breakout that took place here in February of last year. So that's about 11 months ago, and gold then essentially rallied as much as 37 or so percent. Currently, as I'm recording this, up about 30%. So the question, of course, becomes: is this going to continue? What's going on? Are we going to retrace? What I can show you is that it's actually closely correlated to bond yields, and that's an interesting new dynamic that I think is happening because the global bond vigilantes, basically the people that are basically unwilling to buy bonds when they don't like a situation, are kind of protesting right now. And so what you've got here is it's a long-term chart, and I tried to squeeze all this onto one chart. So just bear with me as I try to show this to you. What you're looking at here is a long-term chart, and you can see the chart here goes back all the way to the 70s. Unfortunately, the GLD ETF, which is the red line on your screen, only dates back to about 2004. But my point is, we used to not have such a great positive correlation to bond yield, at least not for a long period of time. But then outside of the COVID period, for a brief moment when bond yields essentially collapsed, and gold prices rallied, we've had an increasingly positive correlation. So if you fast forward here, what's been happening? So we've had a not very great positive correlation, but some sort of positive correlation basically since, let's call it, the great financial crisis, 2008, 9, 11, coming out of that, and between bond yields and gold. And then again, COVID was COVID. It was weird, and things just kind of, torn apart until they reconnected. But what's been happening since we issued so much debt globally, not just here in the U.S., but also globally, what's been happening, particularly noticeable over the past 12 months, is we've seen a recoupling or maybe a new positive correlation between bond yields, so yields going up, as well as the price of gold. And that's kind of new. So if I were to make a guess here, where is gold going to go? And gold here is the candlestick chart. I would say let's watch bond yields. And that is, again, I can't stress enough, kind of a new thing. And it's, I think, because the bond buyers, the bond vigilantes as they call them, are starting to revolt, and they're saying, you know what, enough of this madness, enough of this issuing debt, let's buy some gold. And we can go, this goes a long way. You can go all the way granular and say, you know what, the Chinese are the de-dollarization of the world, and it's marginal, it's at the margin. The Chinese are buying less treasuries, and are actually selling their treasuries to some extent, and with that, or instead of that, are buying gold. So it's all correlated. So if I'm gonna like the price of gold here, I'm gonna want to make sure that it's backed up by bond yields staying elevated. That's I think a really, really important point here. Hope it makes sense. Hope it helps. See you in the next video.